Good afternoon, my student. Today we will cover the relationship between return on assets and return income and equity. We can clear that by the following equation and by ignoring the effect of interest rate and the preferred dividends. So we assume that there is no interest rate and there is no preferred shares. As you know, my student, return on common equity as a basic equation equal net income over average common equity. You can multiply it by sales over sales and average total assets over total assets, so the equation will be the same. But in this equation, we can divide the return in common equity into three components. The first component is the ratio of profit margin ratio, and the second ratio is total assets turnover ratio, and the third ratio is multiplier equity ratio. So this is the three component of return of common equity ratio. As you know, my student, net income over sales multiplied by sales over average assets equal net income over average total assets, which equal what? Which equal return on assets. So we can clarify the relationship between return on common equity and return on assets on the following equation. Return on common equity equal return on assets multiplied by average total assets over average common equity. If we ignore the effect of average total assets, so we can call it return on assets multiplied by total assets over common equity. Also, we have another equation. We can get it from the leverage analysis in the next chapter. Also, if we ignore the interest effect and the preferred dividends effect, return on common equity equal return on assets plus return on assets between practice multiplied by debt over owner's equity. The two equation, this equation and this equation, will get you the same answer. So we have the following example and short example. If return on assets is 20%, debt to asset ratio is 40%, find the return in common equity. As you know, my student, if we apply these numbers on the last equation here, we have the following. Return on common equity equal what? Equal 20% return on assets plus, between practice please put here two practice, one here and the second is here. So the 20% multiplied by 40 over 60. How? If you write the accounting equation, 40% plus 60% equal 100%. Asset debts plus owner's equity equal total assets. If you put 40 over 100 equal debt to asset ratio, 60 over 100, this is the equity asset to assets ratio, but I need debt to equity ratio. So we have debt here is 40 and equity is 60, so we put here 40 over 60, so the return on common equity will be 33.33%. This is a very short and interesting recording. Please rehearse it again. For any additional information, or you can contact me via Blackboard email. Good luck, my student.